Talk about overexposure. This is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. And joining me today is Matt Charne, Audit Director at CLA. He's also the Secretary of the NJCPA Essex Chapter. Welcome, Matt.
Thank you for having me, Brad. I apologize that I am not Frank.
I know. Thank you. Appreciate you recognizing that. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA or CLA. I bet you in the disclaimer you wanted to say that my statements are mine and not yours because you're nervous about what I'm going to say.
As much distance as I can get from you, the better.
Okay. Okay. Anyway, so interesting. We're starting off this year, and the FASB came out with, I've got 5 exposure drafts.
They're always up to something.
Yep, and then we'll talk about some other, the GASB. Yes, GASB. Why do we do GASB? Because we have a lot of members that handle state and local government. We want to make sure that they address their concerns too. But the GASB has 2 exposure drafts. And then we're going to talk about some PCAOB stuff, some very, very interesting stuff.
Indeed.
Yeah.
I'm excited to get into it.
Excited? Yeah. Wow. I like him.
It's a big day.
So the FASB, I love this first one. The FASB came out with income statement disaggregation. Let me back up to December when the ASU 2024-03 came out that talked about income statement disaggregation. Mm-hmm. They just issued this thing in November. And now they have an exposure draft to address something on it.
So they're already making changes.
Yes. Now, fortunately, this one isn't a significant change. There was questions. I don't know how there's questions already, but there was questions about the effective date. It is effective for periods after December 15, 2026, public companies, and for all interim periods of 2027. And there was some lack of clarity, and they want people in the exposure draft. Now, the comments for the exposure draft have passed already, so don't go looking for a comment. But the reason why I'm bringing it up is to say this is an exposure draft that came out. It's pretty simple. They might be coming out with something just to clarify the effective date. Now, fortunately, it's 2026. Mm-hmm. And it relates to public companies. I know you've done SEC work.
Yep, in the past.
You know you got to start planning on this stuff far in advance.
Very far in advance.
Yes.
So it's great that they're getting the word out early, even though it's not quite in effect. We want to make sure that we're getting ahead of this kind of stuff and making sure that the type of information that we need to report is getting into our planning early and that it gets out there, because as soon as the audits and reviews roll around that you need to report them on, it's going to be a whirlwind.
Yep. And then this one, I just want to walk off the set and say I'm done with this stuff. Okay. Credit losses.
Here we go again.
Yeah, credit losses. The credit losses came out. We had to put it into effect last year. They said you can't just use historical. You've got to forecast. You've got to budget. You've got to project. Well, now they're coming out with a practical expedient. They're considering coming out with a practical expedient for private companies, saying, okay, maybe you could look at more historical and what happens subsequent to year end. Thank you. Mm-hmm. I think that this was brought up when CECL was originally recommended. I remember us being in a seminar, somebody in the room, I won't even take credit for it, asked some question, why don't we just do this? And the speaker said, yeah, they're not allowing us to do it. And now they're thinking about coming out with a practical expedient.
Right. And you know, Brad, I don't necessarily think this is such a bad thing.
I think it's great.
Yeah, because like you said, we're all kind of sick of the standard at this point. And a lot of the policies that I've seen companies adopt have all just said, well, in the past I've been looking at what I've written off, so that's my precedent for what I'm going to do looking forward. So if that's the practical expedient they're going to create, I think that's just a great streamline. They
should have done this before. The only thing that annoys the heck out of me, make me do things that are unnecessary in the beginning. All right, environmental credit and environmental credit obligations. You know, We got to get Frank back.
I don't think I've heard of those.
These are easy, not easy. I actually had a client that traded in this stuff, in the broker-dealer space. It's guidance towards environmental credits and credit obligations, such as emissions allowances and renewable energies, okay? If you deal in this space, or if you have clients that work in this space, I recommend you look into this. Again, these are exposure drafts. I know a lot of people are like, not gonna worry about it until it comes out. Big one, government grants. Now, I don't think that this focuses much on nonprofit as it does on private companies. So we were on a call just yesterday where somebody who has a tech company who has a single audit. Yes, you heard me right, a tech company.
I was also in disbelief.
That has a single audit, which means they got some sort of government grant.
Of course.
Now, when PPP came out, everybody said, or ERC, everybody said, do you have a single audit? Unfortunately, they said, no, you don't need a single audit because you've got one of those. But this focuses on addressing grants that are related to assets or grants that are related to income. Assets, building, they give you money to do buildings and stuff like that, or if they give you money as it relates to reimbursement of expenses, and how you should be accounting for it. Now, there is a fairly significant exposure draft, and I really don't want to go deep into it because I think that this one has some propensity to change a little bit. And it gets, it's intricate as to how you're supposed to be accounting for the income in one of two ways, either deferred income approach or the cost accumulation approach. And don't just turn this off because I said government grants. You're like, nonprofit, don't do anything about it. You have a company that gets a government grant. I have a company that's in the aircraft space. They provide parts for aircrafts.
Right.
And they got a grant from the aircraft in the governmental agency. Don't say FAA.
I was about to, so I'm glad you caught me.
And we found that they got a government grant. Who would have ever thought of asking my private company client, you got any government grants? And one of our managers just said to them one day, you don't have any government grants? And they said, yeah, we got a grant. Fortunately, we looked into it, and it was like a $1 million grant too.
Wow.
We looked into it and we found out that grant did not require a single audit. But you imagine all of a sudden now, fairly large company, 100 million in sales. Now I got to start doing a single audit on them.
Yeah, and that's a great point, Brad. So we shouldn't be writing off just because these are private companies or even public companies. If they're getting government funding, this could affect you. So make sure that we're paying attention to the stuff that's coming out.
And that PPP, the ERC, that was all obvious to everybody.
Right.
But these other ones that just sneak in there, a couple $100 million or $100 million in sales, they never thought about telling us about a government grant. Figure $1 million, they didn't think it was significant. So make sure you ask about it. If you're in the company, if you're in industry and you work with your accountants and auditors, make sure you bring it up if you do get something like that. I don't care if it's $5,000. Make sure you bring it up. All right, last one. Now, as I said, you dealt with public companies.
Right.
And in the public company space, you have your year-end reporting, which is quite significant, especially with the 10K.
The 10K, it's a big document.
Yep. And then you have your interim reporting.
10Qs.
Right. And the financial statements, the notes are much more slimmed down. Yeah. Okay. And now here's the problem that we have is, what goes into those notes?
Whatever is deemed important, I suppose.
There we go. Whatever is deemed important. What's important to you? Is that important to me? What's important to me might not be important to you.
Exactly. It's pretty subjective.
Very subjective. So one of the exposure drafts is interim reporting. And they want to develop a comprehensive list of required disclosures. I don't like it, but I like it. I like that they're giving us guidance. Of course, I'm a grumpy guy. I don't like it because I have a suspicion they're going to put things in there that I don't want because it's not important.
Exactly. Yeah, I don't necessarily hate the idea of having guidance around something that used to be subjective because it makes it a little bit easier for everybody to say, this has got to be in here. We don't have a choice. We don't have the option, so we have to do it. On the other hand, if it's something that before we didn't deem was important and now it's creating more work for us, maybe it could be an issue, maybe it isn't. It's important to take a look and make sure because it could affect you differently.
Oh, so you said more work, so you're talking about more fees, and the clients want to pay them.
Of course.
Yes.
I love paying fees.
Yes. All right, 2 quick items. GASB, I want to make sure that we address all the areas. The first one that they came out was an exposure draft, a subsequent event. Real quick, I'll tell you that they're clarifying the subsequent event time frame and subsequent events that constitute recognized and non-recognized events. I'm surprised. I did an internship at a municipal firm from the municipal work, and I had no idea that they needed, not the firm, that they're still focusing on clarifying the subsequent event time frame. That came out a while ago in the ASUs and in the SASs. So I was surprised at that. The second one they came out with, I thought was really good, to be honest with you. It's an implementation guide, -2025, and it provides guidance in a Q&A format for state and local government reporting. And it supersedes all previous guidance. If you don't have a copy of it, email me, I'll send you a copy. And it's not effective yet, but I like it because it brings up a topic and a question and gives the answers to it. And I think it's really helpful. I wish that the FASB for the ASUs would come out with stuff like this on a regular basis.
I was going to say, we don't have anything like that. You got to do the research on your own.
Right. I know that the AICPA put one out on an area that Frank and I said were very helpful. Not to wrap up yet, but I want to just mention PCAOB. Now, I know people go crazy, but I just need that for you to hear what's out there. So PCAOB came out with 2 areas. First one is firm and engagement metrics. So they want information, 8 areas they want reported, they want information on 8 new areas on firm engagement and engagement metrics.
Right.
Ready for these areas?
I don't know.
Partner and management involvement in engagements, workload, training hours for audit personnel, experience of audit personnel, the industry experience. You think it's just us? Retention of audit personnel at the firm level, allocation of audit hours, and restatement history at the firm level.
Whoa.
That's a lot of information.
That's a lot of
That's
stuff.
a lot of information.
And I don't know, it sounds a lot like operations management stuff.
Oh, wait.
Oh, it gets worse.
Oh, then they have firm reporting. So they want to know reporting on fee information.
Wow.
Yeah. The governance information as it relates to the firm, the leadership, the partnership structure, everything. Your firm network information, that means, if your firm is part of a group of firms, they want to know more about that. Yep. So they want some special financial reporting, too, as it relates to the firm.
That's interesting.
Yes, yeah. And then the last one, are you going to be surprised at this? They want to hear about your cybersecurity.
Of course.
Yes.
Doesn't everybody?
Yeah, doesn't everybody? Last thing I'm going to tell you, got some good news. They decided to delay NOCLAR. Remember they had that big issue they said that they were focusing on for the order to focus on NOCLAR? They decided to delay it. Okay, you can learn more about FASB updates and access additional A&A content and events at njcpa.org/hub/accounting. And if you're a member of the society, be sure to join the Accounting and Auditing Standards Interest Group and/or the Governmental Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Matt, thanks for joining me.
Thank you for having me.
I have a suspicion I'm going to be seeing a lot more of you.
I sure hope so.
I'm not happy about that anyway.
Oh boy.
But for everybody here, thank you for watching or listening.